Accounts receivable and accounts payable can be a little bit tricky whenever you're first learning accounting. Let's go over some basics of both of those accounts and see if we can help you remember when to use which account. Accounts receivable is classified as an asset. It increases on the debit side and it decreases on the credit side. Whenever we're increasing the accounts receivable account, an example would be our customer put their purchase on account, or think of it like as a credit with us. Accounts receivable says our customer owes us money at some time in the near future, usually within 30 days. We are going to be receiving that money in the future. That word receivable means us as the business owners are going to be receiving that money in the future. An example of what this journal entry would look like when a customer purchased something from us. So we've made a sale. The sale is a revenue. Revenues increase on the credit side. Our debit is going to be accounts receivable. We've increased our asset. Instead of them paying us cash for their purchase, they put it on account with us or a credit with us. We're going to call that accounts receivable. Now what happens whenever that customer pays on this debt that they owe us, pays on their bill or their invoice? That's what happens when we're going to decrease the accounts receivable account. Our customer paid us cash to settle their bill with us. Okay? In this instance, when they've paid us cash, we have to record cash being received. Cash is an asset. Assets increase with a debit. So I'm going to book that to the cash account with a debit, and I'm going to decrease the accounts receivable. Assets decrease on the credit side. So I'm going to credit accounts receivable for the amount that the customer owes. If I was doing a T account, this debit and this credit to the same account would zero each other out, and that means that the customer no longer owes us money. Now let's look at accounts payable. Accounts payable is classified as a liability because it's money that we owe to someone else. Liabilities increase on the credit side and decrease on the debit side. Whenever we have an increase, an example of this would be we bought an item from another company on account, or think of it like as credit. A payable says we as a company or the person that's doing these books owe this money to another person or another company. So we purchased something, we didn't pay for it with cash, we said, oh, go ahead and just charge it to us. Okay? So that's going to be what they mean by on account. An example of that journal entry would be, remember we didn't pay cash, so we're not going to credit cash. What did we gain from this transaction? We bought something, let's just say, for example, we bought supplies. Supplies is an asset. Assets increase on the debit side. Accounts payable is what we're going to book. Had we paid cash for this, we would have credited the cash because cash was leaving us. Assets decrease on the credit side. But we didn't pay cash, we put it on account. Accounts payable increases on the credit side. I've got a debit to my supply account because we've increased our supplies. That was what we purchased, and we paid for it or put it on account using accounts payable, and that's credited. Now, what happens when we decrease the accounts payable? This means that we paid on our bill that we owed from right here. Anytime we paid for that, we're going to decrease this liability account. Liabilities decrease on the debit side. So I'm going to debit accounts payable. Can you think of the account that we should use whenever we credit? What did we pay them with? How did we pay this bill off? We're not going to decrease our supplies. We're not going to give them those supplies back. We used cash to pay them off. Cash is an asset. Assets decrease on the credit side. We've got a debit to accounts payable, a credit to cash. This is whenever we pay our bill off with that other company. If I were to do a T account, I would first, for accounts payable, I would first have the credit that we started out with, and then the debit to offset it, so that this would be zeroed out.